Here's how normal people like you and I get started in real estate investing. Step 1, know what you can afford. This is the most crucial step. We're not only talking about how much you can put down as a down payment. These are costs for renovations. These are costs for CapEx and big expenditures like if you need a new roof or a water heater, as well as closing costs, which can be anywhere from like 3 to 5% for the buyer. You absolutely need to identify the area you want to buy in, and you should know the area very well, whether it is how many people rent versus buy, what the average household income is, what the overall demographics of that place look like, what the main attractions are. So whether it's the primary or elementary schools, or it's proximity to a really big city, those are things that are critical to understanding the right investment property for you. If you don't know where to find this data, that is okay. There's actually a place that I go to now to really source a lot of this information so I get to know the town better. I'll share all of those links in my caption. Step 2, find a property that cash flows. After all, this is the real gem of real estate investing. Many gurus will try to argue that it's cost segregation and bonus depreciation that are the real benefits. But to be quite honest, those benefits are great if you already have a high household income. If you do not, the benefit is still there, but it's a little bit less, which is why I always say cash flow is the first reason why you invest in real estate. The tax benefits are just a cherry on top. Reminder, if you are looking for an investment property, make sure to check out my real estate investment analysis tool on Etsy. It only costs $20 and it gives you all the information you need to assess whether an investment property is worth it. Now, this is different from other calculators because this shows you the equity that you built, the net operating income, the cash on cash return over 30 years. If you ever refi in the future and get a lower mortgage, you can easily adjust this calculation to see how cash flow, net operating income, etc. change over the time frame you have the mortgage. That's something that Rabu and AirDNA don't currently give you. Step 3, find a great realtor. A realtor can really make or break your experience with buying an investment property. Not only will they help you find the right property, they will be their post-sale experience as well. If you need somebody to open the door and let the painter in to spruce up the place to make it picture ready, if you need the electrician to be let in so that they make some, minor fixes before it's ready to rent, they can do that. They will be there for you beyond just the sale of the property. And I can't say that about all the realtors that I've worked with. Step 4, be patient. One property, one market, one strategy. You do not need 10 properties to be successful. You just need your first one to work. I know that's easier said than done, and I am very guilty of this myself, but when you have done all the research, when you know what area you want to buy in, when you know your numbers and you know what you can afford, you are ready to take action. You want to already purchase something. And that can be the most frustrating part because it can seem like nothing is out in the market that you want or are looking for. And it may look like it's a bad time, but listings move quickly, especially in the springtime. Things pop up all the time. And you might be surprised. There may be a situation in which a seller lists a house or a property on the market and they have to sell quickly. So they are looking for offers within like the week. My advice is to be patient. If you did the work, it will pay off. You just need to wait for the right property. And that may take a month, that may take 2 months, that may take 3, but it will come and you will find it. The big thing is to not give up hope, stay on top of it, and you will find the property. Save this post if you are serious about real estate investing this year. Make sure to follow me for more personal finance and real estate investing tips.